Good morning, and welcome to the Hedge Trade Daily Risk Brief for May 16, 2026. Global equities remain firmly positioned within a bullish primary trend regime. The SPX 500 continues trading above all major daily and weekly moving averages, confirming that the broader structural uptrend remains intact following the February 2026 recovery low. That said, short-term momentum conditions are becoming increasingly stretched. The SPX 500 is currently trading near 7,415, just below major resistance around 7,450. Momentum indicators, including RSI and stochastic RSI, are now signaling elevated overbought conditions, suggesting the market may require a period of shallow consolidation or pullback before attempting another sustained leg higher. Importantly, this does not currently signal structural weakness. Instead, the data suggests a higher probability of sideways consolidation within the 7,350 to 7,400 range before a possible continuation toward the 7,500 to 7,550 region. The Nasdaq 100 remains supportive of the broader bullish regime, with the index continuing to benefit from strong participation in large-cap technology and AI-related sectors. Meanwhile, the Russell 2000 is also participating constructively, reinforcing the view that market breadth remains relatively healthy. Turning to rates and liquidity, the 10-year U.S. Treasury yield remains near 1.09%. Financial conditions continue to support risk assets, and the bond market currently shows no major signs of systemic stress. Volatility conditions remain moderate. The VIX is currently trading near 18.4, reflecting elevated caution but not panic. This aligns with the current market structure: bullish longer-term conditions combined with tactical short-term overheating. From a portfolio positioning perspective, the preferred stance remains cautiously long on equities. Maintaining existing exposure remains appropriate given the strength of the broader trend, though initiating aggressive new longs near current resistance levels is not advised. Preferred accumulation zones remain closer to the 7,000 to 7,100 region on the SPX 500, where risk-reward conditions become more favorable. For the Nasdaq and Russell 2000, the posture remains neutral to bullish. Fixed income remains neutral, while gold, Bitcoin, and USD/JPY currently lack strong directional conviction. Key levels to monitor remain critical. Immediate resistance for the SPX 500 stands near 7,450, followed by 7,500. Initial support remains near 7,300 and 7,200. Weekly closes below 7,000 would begin to weaken the current bullish structure, while sustained weakness below 6,800 would require broader reassessment of the prevailing regime. In summary, the market remains structurally bullish, supported by positive trend alignment, stable liquidity conditions, and supportive rates. However, short-term momentum conditions remain increasingly extended, raising the probability of near-term consolidation before the broader uptrend potentially roars in.